Hey guys, it's Markets with May, and tonight we are going to recap PayPal. And I know some of you probably have questions and all kinds of stuff because we are about 3/4 of the way through earnings season. And I got to say, it's actually been a lot better than I expected. So this weekend, for sure, I will try to do some recaps on that. Additionally, for my AMC fans, I know that you guys have lots of questions. I don't think that it's as bad as some folks are talking about. If anything, I think actually the releases that just came out are all amazing. So I will also be doing some AMC stuff later this weekend. So sub my channel if you are not already subscribed. But tonight we're going to talk about PayPal, which actually had a great quarter. And I got to say, I've been pretty negative PayPal for a very long time. And then I kind of calmed it down when it hit like that 100 level and then really started diving below that. And that's despite the fact that it did continue to 60. But friends, be aware. I shorted that thing when it was above 200 because of what I was seeing. And then Elliott Management came in and I was like, okay, I think it'll dance around here. But now it's crystal clear from this quarter what the next plans are. And so while I'm a little bummed because I structured this as a calendar spread, and I think probably I'm gonna have to do some funky stuff in the AM almost immediately, overall, I'm super kind of constructive. And I've got some notes on how I think it plays out in the next quarters, so to speak. And so if you're more of a day trader in PayPal or if you're trading this thing, hopefully that intel and what I say on the quarter can be helpful to what your deal is. Okay, past performance, it's not indicative of future returns. Hey, Orlando, I'm seeing your stuff. Cool. We're going to get into it in just a sec. I have PayPal as calendar spreads, as I just mentioned, both long and short, because I was essentially doing a really weird, strange set of strangles. I'm going to say it that way. And I think I might be okay on a couple of them, but in a couple of them, I may be less okay. All right, let's get into it. I'm going to share my screen. And then tonight, I would mention that I decided that since I have been working nonstop, I've listened to like 208 of the 500 companies in the S&P 500. I'm just going to have a little Prosecco. So feel free if you guys are having your favorite beverage to enjoy that as well. But I'll do the presentation first before I drink too much of that. Okay, let's see what we got here. PayPal. Oh, I would go through this first because you'll listen to a bunch of people talk about PayPal and the earnings and all this stuff. And it's clear to me that they may or may not have any clue about the fintech space in general. And then they say a bunch of stuff and I'm like, that's not quite right as far as that goes. And I don't want to throw shade because it kind of is what it is. But PayPal sits as a gateway, a payment gateway. They do not do the same thing that Visa and MasterCard does. They are not a bank and they are not quite these acquirer type companies. In fairness, though, they drift in that direction. The way that gateway companies make money is they provide convenience. They provide a very particular set of services that gets increasingly exciting so that you use the gateway and you just use them as an option. All of the other like credit card stuff that allows you to do, you should check out my videos on Visa and MasterCard and the fintech space there. I will absolutely later put a link in the bio, as well as once YouTube lets me, I'll put it as a link at the very back of this video. But the credit card networks are a totally different thing. And that's not what PayPal does. PayPal is also not a bank. So as a result, we look each quarter to see if the CapEx is actually being appropriately spent to convenience and services that's going to take in the next level, or to make sure they didn't become a bank. And actually, I'm really stoked about this because in quarters past, I started to be very concerned with some of the buy now, pay later they were doing as to whether or not some funkiness would happen. And in a lot of the other fintechs, which you guys know I've not been happy with, Upstart, do you know what I mean? Although I'm a little scared to short it in the quarter, I am short it right this minute. But I may cover it before the quarter is said and done because I'm a little scared. But you don't win by becoming a bank because if you go too far, then you legitimately have to become a bank, and your margins, if you're not structured for it, get very nasty until you get structured for it properly. So that's what we're really looking for in this quarter. We want to make sure that PayPal is staying in its lane because, in fairness, it's done all these acquisitions that what you really needed to do. And part of the reason Elliott Management came in there as an activist and started getting a little nasty with them was stay in your lane. Okay, I'm gonna not look at the chats right away, but I will come back to the chat. But you guys are so hysterical; it's sometimes really hard to concentrate and also view the chats as well. All right, let me get through this. It's not the longest presentation. This is what happened. It was a good quarter. Top line revenue up 6.7% is actually decent for right now because honestly, Visa Mastercard also had great top line growth, but not because it was like this amazing December quarter, so to speak. Especially with holiday season being weak, this is solid. Operating income up 18.4%. So the stuff that Elliott Management has requested that they do has actually gone forward. Net income up 14.9% means that, you know, it really is actually taxes that did it for them. But I'm not going to be upset with that. This is a solidly good quarter because I got to tell you, in the past, revenue growth came with like it was very expensive. So you got mostly margin compression every time there was revenue growth, and it made me like absolutely insane. Now, there is a couple of things here that I just want to make sure you see that are kind of relevant. And the reason they're relevant is because right this minute, the announcement on the call was that the CEO is retiring. And I mean, I kind of called that. You guys can see my past episodes, but I've said it in like a lot of different situations, both on PayPal specific videos and off when people have asked me about it. With Elliott Management taking over, like coming in as an activist, it was, you know, kind of just a matter of time before the CEO would resign because that's just how it rolls. And now the announcement's been made, but I really think it's a testament to both Elliott and management, which it doesn't always happen this way, and to the management team themselves, that he's ending on a high note. This is a really decent quarter. And so the way that you actually have to read this quarter is how does it set up for the next series of events that necessarily happen given that announcement, okay? And when we look at this, you can see that the weird oddities are that transaction expense was actually up. And I'll show it to you in a couple of different ways, but you can see that transactions as a percentage of revenue. So you can kind of think of that as a cost of goods sold was up 40 to 45% versus 42%. You know, it's a thing. It's not a crazy thing. It's definitely something that needs to be addressed further. They talked about it a little bit on the call, but not enough for me to be happy, to be quite frank, because it's not normal. And one of the bugbears of PayPal has always been like, hey, how come you don't get economy of scale? They made up for the transaction expense via spending less on sales and marketing and also G&A. So I probably should have highlighted that as well. So basically 178 is a little bit more like if they had spent equivalent dollar for dollar, if this is truly a variable cost, then you would have seen it be like, you know, only 178 million less. And so that was made up for by 142 million less spend in sales and marketing and 55 million less spend in G&A. And I'm kind of okay with that. And the reason I'm kind of okay with that is I do think that some of the other payment processors who really don't have economy of scale and really have a lot that they have to spend on other stuff, namely technology, are going to have like even bigger problems. So it becomes a strategy. Do you push or do you not push during this period of time? It's a real call. The new CEO coming in is going to have to talk about that. But fair and square, this was a decent quarter and there's a little bit more cash on the balance sheet for any new CEO to come in and deal with. So I'm actually okay with how this came out, but that is a little bit of a sort of situation. Here's cash flow from operations. And it's really interesting with these companies because what you really want to do is just make sure that what shows up on the front page actually does flow through the cash flow statement correctly, particularly if you, especially on fintechs, because you just got to make sure in this weaker environment that they didn't become a bank, which some companies do. So here you can kind of see, oh, sorry, I'm on the wrong sheet first. First, I want to go through cash flow from operations, then we'll go through cash flow investments. But here, they had a little bit of an oddity. So when you look down here, cash flow operations is down quarter over quarter on the year, 3 months ending December 31. That came from this, which was basically a lower gain on strategic investments, that's not bad. I'm actually really cool with that. If you add that and you do the math on that and just remove all of it, you end up being flat cash flow on the quarter. Not the best, but still not bad. Do you know what I mean? So I'm okay with that. Cash flow from investing, there's no cheating, and that's all I really cared about, right? So loan receivables were down 16, were down relative to what they usually see. So you're not seeing this buildup of loan receivables. That looks more or less what they typically do. If anything was slightly better. The acquisitions, last quarter, this one right here, sorry, I should have made this box a little bigger. Acquisitions net of cash restricted was a huge pull to operating cash flow last quarter. I'm stoked that they're done doing dumb acquisitions, not to be a jerk, but like, honestly, I need you guys to actually integrate what you have effectively and demonstrate that it actually does make a cohesive business. So I'm stoked about that. Other people may feel differently. Funds receivable, I'm a little bit weirded by that, but when I look at all of how it flows through, that's probably fine. But you kind of need to just watch that in future quarters. When we look, but in general, the cash flow statement looked fine to me. So I was thrilled because this is kind of important. He's like setting up whoever the new CEO will be coming in. And so if there was some really funky thing that he did to cheat the quarter in the cash flow statement, then it would make it something the CEO would have to address. But this is a pretty clean quarter. It's very beautiful if you're trying to do a transition and leave on a positive note, which I think is awesome because the guy's had this amazing career. So I'd hate to see him leave on a bad note. All right. PayPal GeoMix looked great. That was very surprising to me. So what you want to do, and I should have brought this bar over, you want to look at current quarter versus prior quarter. So this line right here. So up 10% on US, up 6% international. That's a big deal because we do have slowing growth, and we did have like very weird retail behavior in the fourth quarter, specifically in December. So the fact that they still posted fine both in the US and internationally, that's a solid thumbs up to me. I'm like very stoked about that. So, that again leaves it in a good spot. Account detail, this oh yeah, okay, so the active account detail, I'd encourage you to look through this and just see what's going on. But I mean, it's neither good nor bad, but if I had to pick a side, I would say it's pretty good. Payment transactions per active account is up, year over year by 13%. You kind of, just in contrast, I would want to see that even higher given how much we've moved onto electronic and what the implications are, especially internationally in countries like Europe that really have to, post-COVID, think about the fact that they really need to stop using cash. So, I mean, some of this stuff is good. It could be better. My suspicion is that right now what they're saying is the strategy, the new CEO will come in and be more confident about that. But you can also see that the transaction expense rate is increased, not decreased. That's what I talked about when I was going through the income statement. So you can see it also very cleanly here. That has to be addressed by whoever comes in as the CEO. And I think the way that you really get that done is to increase the amount of transactions. So both the frequency and the amount of size. And that was spoken to a little bit on the call. Okay. How do you think about it? These were the strategic initiatives. Okay. Buy now, pay later. One of my biggest bugbears with PayPal, that whoever takes over this company, I mean, actually, let me stop sharing for a second so I can just say this. One of my biggest big bugbears with sorry, must be a little bit, I'm tongue-tied. It's been a long week. One of my biggest bugbears with PayPal, and this is something that the new CEO coming in, I hope totally improves upon, is that they break out their earnings in a way that makes it very difficult, and they really can't keep doing this as relates to some of the business lines that they have now acquired and are integrating. And namely, buy now, pay later is not the same as the traditional PayPal business. And the real challenge with buy now, pay later is if you have been in the financial sector in a while, is buy now, pay later does have credit risk associated with it. Now, if you look across the various statements, which I can show you if anybody truly cares, the credit losses look fine because, thus far the consumers hang in, and so far so good as far as that goes. they're not trying to become a bank. They've been able to get everything off that they need to get off. So I'm not concerned about it right now. But given their strategic objectives and where they've gotten to, they've got to start doing a better job of breaking out these pieces of business, because honestly, I'm not even convinced buy now, pay later was the right call. But you know what? If I could see that it was making cash and really building a bigger customer base, I get it. I'd also get it if they really could demonstrate clearly tierage in the type of client they had, because buy now, pay later really is an unbanked portion of the market. Like if I could cleanly see where that growth is coming from, but it's not broken out separately. And so I think it's a little bit, I'm like not stoked, especially if you're going to make it one of your strategic objectives, which quite frankly, I think it's interesting that he announced strategic objectives, because that tells you that they have no thought process yet on who the new CEO will be, or they're probably looking and haven't found that person. Nonetheless, that's kind of just a thing. But that was apparently the first thing they addressed, and they did acquire a bunch of stuff. And then they talked through which geography, which I'm not cool with. Okay. The second thing is they talked about just making it easier for people to implement PayPal around. Honestly, I'm stoked to hear this, because they were doing so many acquisitions and not necessarily trying to like shore up their existing areas of expertise, that I wasn't stoked. And for that matter, I want to re-show this slide, which is why I always show it. Unlike the credit cards, which have an actual moat. So sometimes people be like, oh, PayPal's taking share from the credit cards. And I'm like, oh, you clearly have no idea what you're talking about. So this is really what it is. The gateways is actually highly competitive. And that is why if you don't shore up the business that you've got, you absolutely have issues with having others take market share from you. So given that, I am stoked to see that they're doing and they're really making it a strategic priority. I mean, we're going to have to see how that plays out, because right now your cost of goods sold, which is that transaction cost per user, is going up, not down. So that would be a little bit bad, even though honestly, this was a good quarter. The third thing that I was kind of stoked to hear them actually talk about was to talk about their business as a digital wallet, because they started doing crypto and then they started doing some crazy stuff. And then he never really mouthed to me a strategy that I would have thought should have been the strategy. So now they're mouthing a strategy that, thank God, I've been dying for them to mouth. What they're going to do in this space, I think the new CEO is probably going to have to come in and do something about it. But I expect, given what they pointed out, a revenue division and a cost breakout for the next quarter that demonstrates these objectives. Because this finally is the first time I'm hearing an actual strategy from the CEO, who is now departing, but kind of is what it is. Finally, Pay with Venmo ramped to fully available. I mean, Venmo, to be fair, I think this is adorable as a strategic objective, because even though Venmo is a great product, it is the world's smallest piece of the total PayPal business. So, I mean, like it's even smaller than some of this other stuff. The PayPal rewards thing was blended in, and I could see a lot of the street getting this confused as like a service offering that competes with the credit cards. But again, like I said, it's not the same part of the fintech stack. So I think you're being a little ambitious. And just a couple of other notes, and I'll see if there's any questions. I know it's been a long week for a lot of people. This one is very cool. They started the call off in a way that I thought was beautiful and really happy for anyone that's been following this frustrated for a while. And that was that they were going to be just fine on making at least an 8% growth on EPS just from cost savings going forward. And so their guidance was actually really decent. They did actually raise their guidance, but they are not giving full year guidance because, in fairness, I'm okay with this. The economy globally is still a little helter-skelter right now. It would be ambitious for anyone to do that. And then, yeah, like I said, restructuring is necessarily going to happen because, quite frankly, they don't do the right breakouts anyways. Okay, so with that, let's see if there's any questions. Good evening, May. How are you doing tonight? Oh, that's so sweet. Table rock guy. You know what? Let's see what you got if you want to like put a ring on it. Let's see. Very funny. Thank you for all. Aw. Yeah, I know, Tom. I owe you guys a bunch of stuff because there's a bunch of announcements out tonight. I looked at them super briefly. My AMC folks that also occasionally look at my other stuff. Appreciate you guys. So I will do a video on it, but it actually didn't look as bad as people seem to be interpreting it. It looked like most of it was just follow up with the SEC on the press releases that they did, and because sometimes there's a bit of a delay, and then there's a couple of little notes, and so I want to like lay it out that's easier to see in a way that's easier to see. And then there's some short against the box stuff that I saw that is very awkward. It's basically when you go long and short the same thing to pin it at a certain price over the weekend. It's a little bit awkward, and it may be as simple as the fund was just trying to move it from account A to account B in the same sort of place. The reason I think that's what it was is because the time of year that it happened, which is right at the beginning of the year. Anyways, I will go through that this weekend, but it looked like it was just someone moving from one share class to another share class within a fund family. But I'll go through it and be more clear on that. Um, okay, we've got a lot of people. All right, so I'll give a little brief, but I will do something because I know you guys are here for the ape stuff. Oh, Marcus, you're so adorable. Okay. So like Table Rock Guy, aka Marcus, making his bid for a bigger rock on this hand, I guess, is what we're in. But you know what? If you make the money, we can whatever. I'm just kidding. I didn't mean it that way. All right. So I'm gonna just talk about this really briefly on the AK, but I will do a proper video because YouTube gets a little weird if I do a video on PayPal and then no one seems to then see that it's also on AMC. So I'll do a proper video separate on this. But essentially, when I looked at the 8K, it looked like it was just follow-up stuff from the December 22nd release. There was one thing that allowed them to short like something like 27 million shares. I really want to lay this out because Antara already had both an equity investment in AMC and Ape, as well as now they're getting this huge slug of Ape via the trade out for debt. And I've got a lot to say about this because, I was talking to some of my dear friends and we were getting really excited and we're having a lot of Prosecco, not just this little baby glass that I'm drinking right now, and so I was like, people get mad at me for being long Ape and all this debt stuff. But quite frankly, who you should be mad at is the idiots that told people to short Ape all the way down to 1/7 of the value of AMC. That's who you should be mad at because that's what created this massive opportunity for Ape to be so undervalued that everybody on the debt side was like, yeah, I'll totally transfer my debt into Ape shares. So, I will go through the math of that as well this weekend as part of all of this because I am like so over all the nastiness related to the fact that I love Ape shares, which most of you guys have been super cool about it, but there's always one or two. And since I answer my own comments, it's not fun for me sometimes. But okay, so most of it was that, but there's like 24 million shares. And my suspicion is that it's like some percentage of what they owned before all of this other stuff that they now have this massive amount of AMC shares. And they probably wanted to kind of allow certain people because it was year end, they needed some liquidity there. That's my suspicion, but I want to dig through this. But given how small it is, I don't think that piece of it, which I know some people got a little bit cray on, is that big of a deal. It's like 24 million, but the amount of shares they now have is well over 200 million or something like that. The other thing that I would mention is as relates to that is, I don't know if you guys saw it, but I think March 14th is the special meeting. So it's between now and March 14th. It's probably going to be a little bit crazy in the stock. I tried to go long AMC, but it got so volatile that I just took profits on my calls. I'm sorry, guys. I'll go ahead and admit that because that is what it is. And then I just bought more Ape shares instead because I was like, you know what? The momentum guys, those guys that know that kind of like short interest stuff, I'm just going to give them full props for being expert. I'm not expert level at that. Like I said, I read documents, I read press releases, I listen to earnings calls. I can help translate that stuff. And I know like the Ape shares are just easy. And quite frankly, a lot of the crazy trading decreases if the Ape shares just continue to the spread just starts to close. And so I will go through that further on this weekend. But I actually am not seeing it as bad when I looked at the release. And also, there was a tweet that Silverback did. I noticed that. And I think he clarifies it a little bit, but given the way he tweeted it, I could see if some people are now less clear. But it actually looks really good. It sounds like he did actually transfer more ape shares into AMC. So I kind of want to really review everything and make sure that it's very clear how many shares there are, so that those of you that are also watching the arbitrage between the two don't feel like you've got nothing to work with. But I may not get to it until Saturday. I don't think it's going to make a difference, knock on wood. Friday is what it is. But really, the big kind of, I think you'll get a lot of crazy trading between now and March the 14th. And that kind of is what it is. And I definitely think that those of you that are watching the failed to delivers, it's so sweet that you guys are giving me the heads up. Thank you. You can do it either on my Twitter, my Instagram, whatever. But YouTube, or put it in my comments, because I do see that as well. I don't care how you communicate with me, but I think that's awesome. Thank you for that. And then, so watch the failed to delivers, because between now and March 14th, I think that will be very telling of the movements on the AMC side. I think that the short interest on APE is mostly gone at this point. I mean, there's a little bit, but I don't think it's meaningful. Maybe you guys correct me if I'm wrong on that, but I saw the short interest come out of APE fairly quickly right at the get-go relative to what I'd been seeing. That's all I have for right now. I really want to make sure I have numbers for you guys on this stuff, because I think when there's numbers, it's easier for you guys to see what I'm trying to say versus me just like not having that for you and doing the math for you. So anyways, since there's not questions on PayPal, I'll go ahead and end it now. Thank you for watching. Bye guys. Have an awesome trading day tomorrow.